welcome to the weekend edition. Cheers, happy Friday. Today, I know you're all going to be wondering what the heck I'm drinking. Today, we decided to go with a little High West Double Rye. I'm feeling spicy today, so I went with a spicy whiskey. Hope you guys had a great week, so cheers to that one. Hello, Big Eb, Izzy, we got Tibor. It was Romania, right? I think you're in Romania. Shadow One, Les Golden. Oh, my boy, Chris Collins from NorCal. Good to have you with us, Chris. You're becoming one of the regulars on the program. You know, at some point you can start sending in questions, and I will answer those live on air. Or if you guys ever want to chat with me, you can email me at TraderMerlin@gmail.com. That's the easiest way to get in touch. And hopefully some of your questions will become show topics, as they did today. I had some viewers send in questions, which became the show topics for today. All right, let's just dive right into it. We'll start off with kind of a market recap. I'll run through kind of the top 7. 6 out of the 7 that we look at were bullish this week, looking pretty darn good. Big Eb, you probably did the right thing by selling out of banks and materials, but I still just feel bullish on banks, especially if they start buying back in. And hello, Jimmy T and John. Good to have you guys with us as well. All right, so I'm going to go through the trading week. Ooh, I can't even talk today. It's the whiskey. It's doing me crazy things. I'll go through our top 7 here, but I wanted to real quickly show this one. I want to keep reminding people that we are doing a June challenge. It's a struggle, I know. We have a few days left. It's the 25th today, so you got 6 days left to do it, or 5 days left to stick up with whatever your challenge was. I'm still doing the German. Pretty soon I'll be teaching this whole show, or doing this whole show in German, in case you guys would like to. You know, you've heard my Italian version, but let's see if we do a German show. That'd be fun. And then we'll try to do a different one for July, mix it up a little bit with regards to goals that we're doing. All right, so let me start with the kind of top 7 markets out there to give a general idea of how things performed. Really, everything was looking great except cryptos. So here's the bottom of the barrel here, cryptocurrency. This actually is there's multiple questions that come in here with regards to Bitcoin for the week, but here's your weekly chart of it. Not looking so good. It actually started looking good until today, and I'll show you in snap mode here so we can get the exact percentages, because I always like doing percentages. So from where we closed at last week to where we closed at today, 8.93% slide. But boy, check out the daily. I mean, this thing was great until yesterday, or until this morning, really. Most of that sell-off happening really in one day. We're down about 8.09% today on Bitcoin, and of course, as happens, almost every other cryptocurrency fell suit with that. So it was pretty ugly out there in the crypto space, but to be expected right now. You're hearing more about miners and regulation and other issues, so no surprise. All right, let's keep on moving down the list. I'm going to go to the NASDAQ. I'm starting everything off on the weekly simply because we're doing a weekly wrap-up show here. Last week, we had an interesting close, right? We had this spinning top that was right after this all-time high. And it's noteworthy because when something breaks out to an all-time high, there's this, a thought that it's uncharted territory, what some people call blue sky. And when you have blue sky, you don't have any supply levels or any identifiable points in that price chart where price may turn. So a lot of people feel that you have the blue sky theory, which is it breaks out and keeps on shooting up. The other one is that you have what's called a bull trap or a bear trap, and that's a question I'm going to just dive into here in just a minute as soon as I run through the top markets. But usually, you have to kind of pick your camp. I am more of a breakout guy. However, I do see bull traps happen all the time. Now, on this price chart you see here of the NASDAQ, it's been doing pretty good. Ripping to all-time highs. We were off the all-time high intraday, and of course, if you look at the daily, you'll see that today was its really weakest day of the week. But other than that, it's been just bull, strong like bull Totanka. There was a question that came in asking how I thought it closed today. This doesn't make any difference to me, really. This NASDAQ close was no big deal. It was just a small little negative day. No big deal. Down 0.16% for the NASDAQ on the day. Now, here's your weekly of it. The reason I bring up the weekly is I just want to show you percentage gains or losses. Week over week, you're looking at 2.11% up for the NASDAQ. Continuing to move up, this is probably the biggest weekly turnaround that we've seen in a while. You had that ugly red candle last week. That's this candle here. It was starting to look like, we're coming back in the middle of the range. Maybe we'll challenge those lows that are down around that 2100 mark, maybe a little bit lower than that. This week bounced right back. NASDAQ, Russell was up 0.16%, but the weekly close was a very nice close to the tune of, give you those exact numbers, 4.68%. Guys, keep in mind, 4.68%, a lot of times, this is like an annual gain for these indexes or loss, it averages about 8%. That's the average gain for the S&P 500. And to see 4.6% in a week just means that there's tons of opportunity out there. Okay, gold. Gold for the week not really doing great, although it did stabilize right in that middle of demand zone. We talked about that last week. That's why I went long on gold options. I am long still on GLD. I'm going to keep holding those. I do believe we've stabilized a little bit here, and I'll continue to hold those, and hopefully we'll get some move back up towards that 1900 mark. On the week, though, it wasn't the biggest gainer. It was slightly up, but nothing overly dramatic, about 0.72% for gold. S&P, the one that I've dumped and am out of, this is because that big about-face turnaround that it had yesterday came right back into those all-time highs. Just the strength moving to the upside kind of made me nervous. And I went, yeah, I'm gonna have to bail on those put options that I bought. Took a small little loss there. Glad I did, because today we had nice follow-through to the upside. S&P was up almost 0.5%, finishing the week up 2.91%. But check out the daily. Here's your daily on it. Nice, gapped up higher, kept on running. So yeah, glad I got out of that one. Who knows where the ultimate turn for this point would be. Hey, Todd, good to have you with us. No booze yet? Well, you know what? I will have another sip of my double rye. If you haven't had the High West double rye, it's an acquired taste. It's a bit spicy. All right, and lastly, a commodity which I think deserves a lot of conversation for not just this week, but also next week, because you have an OPEC meeting. Now, of course, OPEC is the kingpin, the cartel, the union, the gang of oil producers around the world. Now, if they get together at that meeting and start talking about increasing supply to help drive price down, well, we know what would happen with the price of oil. And I think you're going to get a lot more pressure on oil this week because of U.S. governments and disdain for all of us getting into the summer months thinking, hey, I'm going to travel. I'm going to drive up and go see Chris Collins up in Petaluma and need gas for my truck. I'm looking at over $4 a gallon right now. I think last week or 2 weeks ago when we were doing the show, I was joking. It was like $3.80, $3.90. Now it's over $4 a gallon here in SoCal. I know you Texas peeps are out there laughing, going, we got it for $2.50 a gallon. Well, we got sunshine and nice weather out here too. Anyway, no matter where you are, you're probably impacted by the price of gasoline, and I think that that's going to be of interest next week at OPEC. I am pretty sure the talk track for our politicians will start to incorporate more of this anti-rising gas prices, right? You have to say what your constituents want to hear, which is, I don't want to pay more for gas. That said, let's take a peek at that oil chart. Here is the crude oil chart. Let me take these moving averages on. Somebody asked about a death cross, which I will show here in a minute, but I wanted to bring up this chart here because on the daily for crude oil, this is beautiful. I mean, if you look at the point where we talked about a breakout, I think you guys might remember we were looking at the 66.80 mark as a breakout. Now, let's go back. I know we've got some people who are somewhat new to the program and might not know what we talked about in the past. So I'm going to relive this one because I think it's very interesting. I feel like this line actually moved. That's weird. This line should be here. Anyway, this pattern right here is called an ascending triangle, and it's basically bumping its head on the 66.80 mark. And we talked about this, and the last time we had an OPEC meeting was right here. I believe it was right there, as it was coming into this level. And the concern was that OPEC, with their actions, could very easily pop this out one way or another. When you have a formation like this, it's generally a bullish sign. Therefore, we were kind of leaning to the bullish side. Now, the question is, where do you measure from? Is there a way that we can gauge how far this thing could move? The normal measuring point for me is going to be from the base of this triangle, or so the peak of that triangle to the base. Now I've got snap mode on. And that means it'd be about this distance right here. And I think it's kind of interesting because if we look at how much it's moved since it broke out, right? That's, one sec. Oh, I'm having script errors. Gotta love TradeStation. Again, messing up on me. Notice that if it breaks out, that's the distance that it should move. It's about 14.36%. That's not that it should move. That's a historical way to measure. Now, if you look at that, there is a level. I'll mark it off right there. Okay, so we've got 4 horizontal lines on the chart. The first one was an area of supply where it was smacking its head against at 66.80. Thought, well, if it breaks out, there could be good upside potential. We also identified this $72 mark, which was an area where, if I zoom back here, which I will do right now. Oops, let me, why you're not giving me all my data? Let's go to the weekly. You notice that was an area right here at 72 where it was the origin of this big move down in the beginning of 2020. This is probably right as COVID was starting to become an issue. The next levels up are going to be a little bit harder to see, but 70 or 81 all the way up to about 85 are the next major challenges for me anyway on crude oil. Now, that said, if you look right here, this target is 76.39. That's the measured move out of this. Doesn't really line up with anything significant. So I'm not putting too much emphasis on that. I am putting emphasis on this move that since this breakout hasn't moved 14%, it has moved about roughly almost 13% in the last month. That's a pretty substantial jump for crude oil. Of course, those who are long, I do own some USO. So I'm okay with this move up. But again, anybody who's at the pump consuming gasoline is probably not too happy about what's going on with the price of crude oil at this moment in time. And it was by far your best performer for the week. It was a pretty good move up. All right, good thing electric scooters are on order. Yes. Yes, actually not scooters. I told you I ordered 5 electric bikes from China. Good news is Alibaba informed me that yesterday my boat left port. If only I could have a tracking number on that, and hopefully it doesn't get stuck sideways in the Suez Canal, as we saw happen a couple months back. Well, that was an interesting one as well. All right. Hey, Maheen, I'm glad to share as much information as I can with you guys. Thank you for listening and tuning in. And, if you have questions on things you want to learn, send me them, and I'll do my best to answer them. As Les knows, Les is usually our first one on the chat to say hello, and he did again today. He sent me in some options questions, which were above my pay grade. They're outside of my area of expertise, and I'm not going to comment on something unless I really understand it very well. So I will get to those less. I'm trying to get somebody on to address your options questions. But if you have questions, send them on in. And if it's live during the show, you guys know, a bunch of different question marks. Why order 5 of them? That's a great one. Well, one of them is my dad doesn't watch the show, so I guess it doesn't matter if I give out his birthday present. But my dad's getting a little bit older. He was an avid motorcycle rider. Actually, he met my mother on a BMW motorcycle in Germany. And I personally believe that because of the motorcycle, my dad and one of his buddies were on these motorcycles. My dad's friend had a Moto Guzzi, and my dad had the BMW. And I believe the other girl, who ultimately ended up being my mom, was supposed to ride on the Moto Guzzi, but she goes, I want to ride on the BMW. So, long story short, here I am. Proof the rhythm method doesn't work, and proof that a man on a motorcycle is one sexy thing. I have the motorcycle that my dad actually met my mom on sitting in my garage. So, anyway, there you go. Well, Les, I don't want to give you vague answers because I don't want to give misinformation. And I have done that before. And thanks to Ed up in San Jose, every now and again he catches me, not necessarily just intently saying something false, but making a minor mistake, and I'll correct myself publicly. I have no problem admitting that I'm wrong anytime on the program if I am in fact wrong. Let's see, what else? Port of Los Angeles is not better than, I know, it's funny, I go to Dog Beach every weekend, and you can see the horizon. There's all these just gigantic tankers still lined up out there. Yes, Eric, I do think that gold reversed a little bit, but let's look at that chart here in just a second. So why order 5 of them? One of these bikes is going to be a gift from my dad, who again he's getting a little up there in age, and motorcycles. So I bought him an electric bike. I'm going to keep 2 at my house, one for me, one for a guest, and I've got let's see, that's 1, 2, 3, 4. So and then one I'm going to have a friend buy. A friend wants to buy it, and I think that leaves me 1 extra. So maybe I'll have 2 guest bikes here in case friends come to visit. Got to take care of your friends when they come visit, right? All right, let me go into listener questions. So this is one of the ones that came in from Sarah. Sarah says, you mentioned bull trap the other day. Can you explain? It's more of a psychology. I don't personally believe that there is a way that you can fully identify a bull trap and then get out of that position. The reason that something is ultimately a bull trap, it's after the fact. So let me go to, what's a good example of a bull trap? Oh, I was looking at one. Oh, Altera. Let's look at Altera. ALTR. So here you have a weekly of Altera, and you guys can see. Let me take off the hard red edge here so you don't get to see this whole piece, but we'll do it right there. All right. So if you were looking at a breakout trade on Altair Engineering, you look right there, right around 56. Wow, my numbers are totally off. 68.50. Is the number I'm looking at. And you can see it kind of smacked its head up here repeatedly over the past few months. And then all of a sudden yesterday, boom, it ripped through. Now this also brought in a little bit more volume. This historically is a very low volume stock. It trades on average of about 280 million shares per day. So it's one that I would be trading, but it just kind of came up on a trap filter I was running. And If you look up here, you can see that it ripped above that line. Now that brings in a whole lot of new people. How do we know? Well, you look down there at the bottom and volume was much higher than average. And then you fast forward through today and all of a sudden it comes ripping back down. So generally a bull trap's going to be in one day it'll happen where it goes above a breakout zone and then comes right back down. It sucks all these people in who are waiting for the breakout trade. And then my guess, my assumption and my experience tells me that you probably have some big institutions watching that level as well. And they're going, oh, we just saw a whole bunch of retail people buy this thing. Let's push it back down real quick to stop them out. And then we'll take it back up. Remember that the sad reality of this is I'm speaking for myself. I don't want to imply anything on you guys, but most of us are probably small fish in this gigantic ocean of the financial markets, and our 1,000 or 5,000, even 10,000 shares of something is completely insignificant when you look at an institution dumping several 100,000 shares of a stock. So we're not going to have that power. Even collectively, somebody like Wall Street Bets, yeah, they might have it temporarily, but the ultimate power is going to go back to those hedge funds and the big institutions that are going to short those stocks like GameStop and AMC and push it all the way back down where they belong, ultimately, in time. So that's one. Let's see. Dudley says, Eric says, PLTR. All right, let's check it out. PLTR. These happen all the time, and well, I wouldn't call this a bull trap at all. I mean, this is just a great trend. This thing broke out and just continues to have stair step up. So, Micron Technology looking pretty darn good. What normally with a bull trap is it's going to break out of a defined zone and then come real quickly back down, having pulled everybody into it, right? Other than for sport of it, why do institutions behave that way? I don't know. That's a good question. You know, I had the opportunity many moons ago to go sit on the floor of a major market maker. I guess at this point I could mention the name. I guess it doesn't matter. It was Southwest Securities. So when I was trading back in the late 90s, you know, you guys know I was doing tremendous amounts of volume. My average in the late 90s, 98, 99 was 550 trades per day, which is insane. Average share size 1,000 shares. You can imagine the amount of capital turnover that I was doing was just off the charts. I look back now and I think that was just stupid what I was doing, but hey, it was an experience and I did it. Because we were doing so much volume on our trading floor, we were connecting through a clearinghouse called Southwest Securities, and they sent myself and one of my other trader friends down there to check it out. So they invited us in. It was really interesting. It was probably one of the most secure businesses I've ever been to. And you have to think about what goes on a trading floor, right? There might be some serious devious stuff going on. They're not allowed to be recording anything, no phones, no nothing, because of risk of people getting information that they probably shouldn't have. So when we walked in the main door of the building. We had to do a security check, so we got patted down and everything for electronic devices. The phones weren't really an issue back then. They weren't like cell phones were really not that big of a deal back then. I'm sure now they would make sure you don't have them. When we went up to the next floor, we had to do another ID check and another pat down, and then we got into the trading floor and they had to check our ID a third time to make sure who we were, and they called downstairs to verify that we were the exact people. It was bizarre how secure it was. Anyway, they ended up sitting me down with a market maker, and I've learned something early on that if you really want to get somebody who's got their guard up and their defenses, if you want to get information out of them, just act really stupid. The dumber they think you are, the more they're like, oh, this guy's an idiot. He's not going to understand shit. So we can drop our guard. And I was asking him the dumbest questions. And I knew exactly what he was doing. I could see his NASDAQ 2 workstation, which is kind of, you take level 2, which is what TradeStation is, and some other direct access platforms. And theirs is just a little bit more automated. They call it level 3, but there really is no level 3. Anyway, I was watching his order routing and seeing exactly how he was processing orders coming through, because I could see direct orders hitting his screen. I'm like, oh, so what's that? You know, oh, and he'd be like, oh, that's an order. And so I started asking him, like, do you track? Can you see things coming through? And he goes, yeah. And long story short, he proceeds to tell me how they are, in fact, playing games. For example, there's a code that would show up on this guy's screen. And let's say it was like PCH 1152678, and he'd say, oh, well, PCH is a trading firm in Dallas, Texas, right? And 115 is the branch office, and then you can see 2678 is the actual trader. They literally knew whose account it was that it was coming from. And he would say things like, this guy is always sending me small little orders, sub 100 shares. And market makers didn't like if you went odd lots. Remember, an odd lot is anything that's not a 100 share increment. And he would be like, oh, I'm not gonna execute this guy's order. Or if he did, it was when he knew that the price was going to be going down and he'd just unload on this guy and feed him everything he wants. So why do they do it? Who knows? All I know is they have the power to do those types of things. Now, this guy was also monitoring like 30 different stocks at a time. And he said when he comes in, he was watching those same 30 every single day. This to me was very important knowledge. Think about it. If you know that the guy on the other end of your trade, and right now you don't know who he is, I know, Jason, I just made up PCH. It was just as a made-up name for the example. It was so long ago, brother, I can't remember exactly what the acronym was, but it was this long string of characters. And I forgot my train of thought. Other than resort, why they behave that way. Yeah, I'm not exactly sure why they would do these types of things, but they have the power to do so. Now, again, going back to if I knew that the same guy was trading these stocks, you go back to my late 90s trading experience, and I for some reason, I found this groove that I got in where if I traded the same thing, I got better with it. So again, I did journaling, and I looked at my trade results, and I said, okay, I'm trading 40 stocks a day. I don't necessarily need to do that. Which one of those 40, or which 5 of those 40, am I showing the most profit? Who cares what I think about the company? Who cares about anything else? Which 5 out of those 40 are making me the most money? And it was weird is at one time it was E-Trade, it was ETFC or ETRD. I forget which symbol, it was ETRD or ETFC. They changed twice. I found that with that one I was very consistent. So I dumped everything else and I basically traded E-Trade for 2 years. And then all of a sudden I lost whatever, the mojo, and it didn't work. And all of a sudden I started trading Broadcom, BRCM. And then I traded, what was the other one? Juniper, JNPR. And for every one of these, it was like a 2-year window where I was nailing it. I was doing really good, and then something changed. My guess is it was traders changed on the back end. Because if I'm trading Juniper every day, and I'm sending orders out on level 2, you're going to start playing with the same players, and you'll start to see how they play ball. And if you start to identify their patterns, it does give you a competitive edge. But I'm telling you right now, in this day and age, much, much harder to do than when I was trading back in the late 90s, because now you have so many dark pools, liquidity pools, ECNs where they can mask their appearance and their identity. Back when I was doing this, you could almost send it straight to these guys and see their action. Anyway, I don't know why I went down that rabbit hole. I think it was because of John's question about other than for sport, why do institutions behave that way? I don't know. Stick it to the little guy, have fun, just sit back and laugh. I mean, when you've got $50 million at your disposal and some guy's coming at you trying to buy 1,000 shares of a $50 stock, you're like, oh, watch this. Let me just torture this guy. Boom, down goes his shares. So, Sarah, bull trap is essentially when you have something that's moving up. I'll go back to the ALTR. Altair, you have this big breakout, preferably with higher volume, and then all of a sudden it comes ripping back down. Not that it's done. I mean, this thing could still trend back up. My guess is you'll probably come down and retest the 68.50 mark before potentially moving back up. But a lot of times it'll tiptoe across the line. You'll see the volume come in if you look at it on a short-term time frame, and then it comes screaming back down and stops everybody out. Same thing works for a bear trap, where stock is trending down. People get the feeling, oh, this is it, that trend's in place, here we go, we're going lower, and it breaks through a nice demand zone, and all of a sudden it comes ripping back up to the upside. And again, you don't necessarily know when those are going to happen. Even though you go through the process of identifying strong supply or demand zones, price can still knife through those at any time. And I feel like I'm starting to see that more where maybe institutions are looking, going, oh, well, I believe there's going to be an accumulation of stops here because it's right below this demand zone. Let's take out those stops, trigger them, and then we'll take it back up. It's the nature of this game, man. It's a wild one. All right, what else we got? Lee said, thoughts on Micron Technology. All right, so Micron, MU. Let me see what. First off, when you look at this semiconductors and chip space, this has not been one of the strongest ones. So let me do a comparative analysis here, and I'll put Micron on the bottom. Again, you're in the chip making space. Give me a second to copy this window over and make an example up here at the top. We'll do SMH, which is a semiconductor ETF. SMH. So here you see semiconductors. And what I want you guys to notice is, notice the right-hand side of the chart. Semiconductors have been rather flat. However, Micron Technologies has been making lower lows and lower highs. So if we were to look at strength versus weakness here, Micron's not looking very good. Maybe it's better if we look at it like this. I'll put them side by side so you can see the dramatic change in trajectory. Say that one 3 times fast after a nice tall glass of whiskey. So this is looking at them roughly the same. I want to get them to be the same time frame. These charts are showing the same amount of time, same time frame. Clearly, the one on the right looks much weaker, correct? I think everybody... Oh, I'm sorry. Thanks, Big Eb. Jeez Louise. Do it all the time. I'm over here drawing away, showing charts. Thank you, Big Eb. The chart on the right is showing us extreme weakness, right? The trend is over for that. That trend ended in March. And the only reason we know that trend ended is it's now making lower lows, right? And it's making consistently lower lows. Yes, I know. The chart's there now. It's not the whiskey, guys. Just my brain is so full of other things right now. Sorry. Yep. Thanks, Alan. I know. Too much whiskey. Yeah, you compare these side by side. I would actually argue that the semiconductors on the left-hand side look pretty good, right? It's making higher lows. Granted, the swings are wild, right? But it's right near the top now at 255 on this SMH. That looks pretty good. We could look at something longer term, maybe see on the monthly or weekly, but what I'm more interested in is what is the tone for Micron over the past few months? It's clearly weaker, much weaker, and this does not make me feel good about Micron, Lee. If I'm not mistaken, I believe Micron, I think they report earnings next week. I think it's on a Wednesday they report earnings, so I'd be careful with it here. And I actually would be looking at some of these levels to short. I think 85 would be a decent level to short. You've also got one that it came into today at 82.78, which would be a potential short opportunity here for Micron. So, not liking it. Sorry, I'm not sure if you're holding it or not, but it just doesn't look good. And even at this price point of 82, I would argue that it's come back up in a supply. If anything, I'd be looking to go short this one. And it's tough to say, because when you look at something like the NASDAQ, here's the NASDAQ on the left. It's making all-time highs. It's ripping. However, semiconductors are looking a little bit weak. Here's SMH again. Now, let's compare some other ones in here. How about AMD compared to SMH? Clearly weak. We've had this. Well, this thing's been drawn out a long time ago. Wow. June 30th. That's Wednesday, right? I think it is Wednesday. Damn, I'm good. Yep. We got earnings on Wednesday. If you look at, let's see, how about Intel? So funny how Intel really looks bad. I mean, that sell from 68 all the way down to 53 and change. It looks like we've already identified that one before at some point in the past on this show. Micron, I guess, compared to Intel, maybe looks a little bit better. Let's look at MU on the left and Intel on the right. Intel had that fall from grace. My guess is just a bad earnings announcement back in April. But all in all, I'm not a big fan of either one of these. I wouldn't be looking at Micron or Intel as potential longs, or even AMD. All right, what else do I got? Last question that I think that was sent in. This is from Scott. As I keep hearing about a death cross on Bitcoin, is that really bad? And that's really bad. What is it? I gotta be honest. I don't think you have a death cross on Bitcoin. So let me get my charts back to normal here, because I modified those and moved them all over the place. And we'll go to Bitcoin. Here's your Bitcoin down 8.09%. So there's your price chart, right? There's your daily. Obviously not looking very good. Some people might call that a head and shoulders. If it was, that is an ugly head and shoulders. Yes, I agree, Big Eb. Intel's a dog right now. And this is where you have to put your feelings on Intel aside. I know that there's people out there that just love Intel and think it's one of the greatest companies in the world. It might be, but right now price is telling you it's not, right? Whatever the case may be, it's not looking so good. So you sidestep it, you move out, and when it does present an opportunity to buy back in, you go for it. There might have been an opportunity back in May. I don't know where it's going to be headed from here. There is this big unfilled gap here, which makes me feel a little bit optimistic, but, semis have had a pretty big rally. Which chart, Big Eb? All right, so Big Eb gets that, let's go to the Bitcoin. I want to do the death cross thing because it's of interest. If you look at this, it's clear that the moving averages should be trending down, because if you go back to early April when this thing really started to fall apart, we had some monster swings, and that should curl the 20, the 50, the 200 is probably still moving up. I have charts up. Charts should be up. So let me add on those two moving averages here. Here is the moving average, and you got your 50 in blue and your 200 in red. Now, why is this important? First off, it's not a death cross. So, Scott, I'm not sure who you was told that by or read it about. Bitcoin is not in a death cross. So what a death cross would be is when this blue line, which is the 50-period moving average, crosses below this red one. And that's really a sign that you should be getting out. My problem with this is if you look at something like this and you're waiting for these two lines to cross, this blue line to cross this red line, because it's a 50-period moving average and a 200-period moving average, you're talking about something that is extremely lagging. And by the time it tells you to, quote unquote, get out, how much has it already fallen? I mean, look at the price chart. So it hasn't even crossed yet. Let's do the drag tool here and see what. Let's assume that these things continue down at their current trajectory. And if this continues to drop, maybe we end up crossing somewhere right around here, which would be about 36, call it 37,000, all right? Let's assume that that's your signal to get out. You're waiting for the death cross to tell you to get out of your long positions. So you're out at 37,000, but why didn't you get out earlier if you're using these indicators, right? In the case of Bitcoin, I'm not getting out. I'm a hodler, so I'll continue to hold this one, no problem. I don't worry about that. But a lot of people like to use these as an indicator to get in or out of a position. To me, it's the last ditch effort, meaning you should have been out way before these things cross. You can find death crosses all the time. Let's go to, Tesla is just about to have a death cross. Right, there you go. Right there. If you cross this 50 down below this red one, this blue below the red, that's a death cross. You also have the golden cross, which, let's scroll back. We didn't even have enough data to show you a golden cross on Tesla. But let's go, let's see if there is a golden cross on Bitcoin. A golden cross is simply when it moves up above it. And there we have one. You have a golden cross on Bitcoin that goes all the way back to roughly, I hate when these tools do this. You're looking about June of 2020, right before it had its monster takeoff. That's the 50-period moving average crossed above that 200. Bitcoin to 99,000. Look, anything can happen. It's not that long ago that Bitcoin was at 9,000, Batista, right? I mean, this price chart, you can look and go into March of 2020. We were down at 7,000. Maybe even lower. So yeah, it can certainly go a lot further down. But another one that doesn't. Yes. Well, there's a lot of people who think it's a scam and others who don't. To each their own. It's okay. All right. So lead, no death cross. That is not a death cross. A death cross is where that 50 crosses below the 200, and I just simply do not see it on this one at all. Is a death cross specifically a 50 and 200? Yes, it is only a 50 and 200. And you can have all sorts of other crossovers. That's a great question, Leighton. You can have a lot of other crossovers. For example, Brandon Wendell, he uses a system where he'll add it on top of supply and demand, but it's using shorter term moving averages. And a lot of people do that. But when you hear the term death cross or golden cross, it's always a 50 and a 200. That's the standard out there. And it's definitely viewed as a very bearish thing. I mean, and you have to look at it from the long-term perspective. If over the last 50 days, prices are below what they've been over the last 200, that means that it's rolled over. Of course, again, it's all lagging. Very, very lagging. All right. Jeff. Is Jeff here today? Jeff, are you with us? Yeah. I don't think so. It's a bummer because Jeff sent in a question recently that has like a dozen crypto questions to it. There's all these small questions within it. So I'm gonna do a power run here through his crypto questions. And if you guys have any questions, just send in question marks before and I'll answer it. All right. So here's the first one. If you have crypto in cold storage, does it get mined? No, it does not. Cold storage. Let me ask you this question: if you have gold in your possession, does it get mined? No, it doesn't. It's already been mined. Mining is the action of making coins real, meaning bring them from nothing into existence. So a miner's job is to basically mint or create coins. Once the coins are created, they're just distributed. So if you have them in cold storage, as I have some on my Nano Trezor over here, those are in cold storage. They're not part of the mining process at all. They've already been mined. Now, The miner's job in crypto, in Bitcoin in particular, we'll use that as an example because a lot of different structures, is to solve blocks of data, and for that they are rewarded new coins. Right now it's 6.25 new coins for every block of data solved by Bitcoin. The miners are keeping track of all the transactions of Bitcoins. So that's what they're really doing, is monitoring transactions, validating transactions. There's nodes and things that can do that, but they're not creating anything new. They're given new coins. That's the minting process for solving a block of data. Hopefully that made sense. Second question on this was, if all crypto was in cold storage, would any energy be used to run through the blockchain calculations? Yes. Cold storage. So whether it's hot storage or cold storage, remember the job of the miners is to validate transactions and keep track of a distributed ledger. So my Bitcoins, or some of my Bitcoins, which are sitting on cold storage, right? It's a Nano Ledger S. It's an electronic device that is disconnected from the internet. On that, I have several Bitcoin. Now, the ledger knows exactly where those Bitcoins are, right? It's written in the ledger. So every time that ledger is processed, it has a record of where. So every 10 minutes, it's essentially updating where those coins are. So in theory, every Bitcoin that is in existence is part of the ledger. So when that miner solves a block of data, yes, he's creating new coins, but he's also validating transactions and saying, here's where every other Bitcoin is. So he said, if all crypto was in cold storage, would any energy be used to run through the blockchain calculations? Yes, right? The energy is used to simply maintain the ledger. That's really what you're looking at, and the validation of transactions. How much Bitcoin is in cold storage? Don't know. You can go back. There are some really cool websites that will tell you how long it has been since certain accounts have moved. One in particular is Satoshi Nakamoto's. They believe it's Satoshi Nakamoto's, who has several $billion sitting in an account. I believe it's 1 million. I think he's got over 1 million Bitcoin sitting in an address that hasn't moved since, I think, 2010. It's one of the earliest addresses that hasn't moved. I don't know if it's Satoshi Nakamoto's or some guy who's losing his freaking mind right now because he lost his private key. and he's sitting on, $32 billion worth of Bitcoin, and he can't access it. He can look at it, but he can't access it. That would drive me absolutely bonkers. All right, I'm almost done with these. I'll just do the first page, Jeff. You had a whole bunch, but I'm only going to do a few here, and then I'll go to whatever listener question. If you guys have some questions, let me know what they are. Send them on in. I'm happy to answer them. Alex, good to have you with us. I know you've been busy traveling for baseball. Look at them Giants, baby. If Bitcoin is using more electricity to be mined in Argentina, I'm assuming cold storage uses zero energy, how much would be used if all Bitcoin were being mined? Okay, so this is where it gets a little complicated for the crypto space. You have to look at it this way. You could run Bitcoin with very low energy. The reason that we're using so much energy is the reward for the Bitcoins is so much. For example, every block of data that a miner solves is 6.25 Bitcoins. Now that's 6.25 Bitcoins plus any fees. So let me just go off the current price right now. It's $32,135. Times that by 6.25. That means for every block of data that a miner solves, they're getting $200,000 plus. It's $200,843.75. Boom, boom, boom. Every 10 minutes, a miner could be making that. So let's just say I've got two pools here. I've got one miner over here that's got a terahash of mining power and another one that's got a terahash. I have two miners, right? And they each have the same amount of power. They have a 50-50 chance of solving that block of data if that's all there are in the world are two miners. If miner A wants to increase his chances of solving that block of data and getting those Bitcoins, what's he going to do? He's going to buy more hashing powers. Now he goes from 1 terahash to 2 terahash. He is twice as big as the other miner, which means he has a 66% chance of solving that block of data. Well, the other miner is going to go, wait a minute, you're now ahead of me, I'm going to buy more equipment, which uses more energy. So what you're getting is this chasing of miners trying to get more equipment, more mining power, so they have greater chances of solving a block of data. So it's not necessarily that Bitcoin per se needs to have more mining power. It's just you have all these businesses who are looking at it going, shoot, I could buy these mining rigs, set up a warehouse of them, and be solving blocks of data and get tons of money for it. And the more that Bitcoin goes up in price, the more attractive that proposition becomes. Now all of a sudden you see China shutting down, hashing power is dropping significantly. We're seeing that drop, right? So all of a sudden they have to adjust the difficulty, and it's a complicated process. But to answer your question, if Bitcoin uses more electricity to be mined than Argentina, that's just because of the global consumption of mining rigs around the world. You could cut 95%, 99% of the mining rigs out of the equation, and Bitcoin would adjust its algorithm so that the remaining miners would still solve blocks of data in 10 minutes. But again, it's just the sheer amount of people trying to solve a block of data. It's not like it's Bitcoin's fault. It's people trying to capitalize on the rising price of Bitcoin and trying to solve blocks of data. All right, let me see if I got that. Sounds like diminishing returns. Yeah, right. And I saw a very interesting presentation once, and basically said, how much would you guys pay for $1? If you had $1, how much would you pay? Well, I wouldn't pay more than $1, right? You wouldn't pay more than $1 for $1. You're going to try to buy it at, let's say, 75 cents or anything cheaper than $1. And what happens is, I think the cost of mining equipment pushes it so that the cost to extract new cryptocurrency, whether it's Ethereum or Litecoin, whatever, that cost is going to be just under what the value of that cryptocurrency is. So as we've seen this huge drop in the price of cryptocurrencies, you're also seeing mining rigs being pulled back because the cost of electricity for them is prohibitive as well. When Bitcoin is $60,000 a piece, they can afford a lot. I'll spend that money, right? I'm going to spend more on electricity because it's $60,000 a coin. But all of a sudden it drops back down to, let's say it goes to 10,000. They can't use the same amount of power, so they're going to shut down some of their mining rigs because they'd be paying more than $10,000 per Bitcoin, if that makes sense. All right, what's this? Giants versus Astros World Series works for me. Get me tickets, brother. Never been to a World Series. Thoughts on Matt Long? Sure. Let's bring them. Anyways, if there's any questions on that, let me real quick go on to. Brendan says everyone needs more hash. Totally different concept. Brendan needs new lungs if he's got that much hashing power. Mr. Cruz says, does China's mining crackdown create a risk or an imbalance in the distributed ledger? What are the risks? Great question. There actually was a lot of concern that China had too big of mining rigs, right? That the mining pools. So for those who don't understand how it works, let's say, for example, right here I've got another computer in my house. I could turn that computer on by myself. Not that I'm inept of turning on the computer, but turn that one on by myself, set it up, and configure it as a Bitcoin miner. Now, it doesn't have a lot of hashing power. Therefore, I'd be competing with this huge universe of warehouses like Costco of mining equipment. My odds of solving a block of data by myself are next to zero. I mean, I could run that thing for the next 20 years and probably not get one block solved. My computer's just too weak. So what I might do is I might join a mining pool, which brings together, all of us could be a member of the same pool. We just basically plug our computer into a network, right? You connect to the internet somehow through your Ethernet, and you put in the software and you say, I want to be a miner for that Bitcoin. And you point it at this pool, and it gathers all of us together. And now we have a greater chance of solving a block of data, and we get a percentage of the rewards based off what we contribute to that mining pool with hashing power. Now, these mining pools in China are massive. None of them are over 51%. That's anytime you get anything over 51% of the mining power, it's a huge red flag. You should walk away from that project immediately. It's way too dangerous because at 51%, you can now put in fake transactions. So you want it to be somewhat fragmented, but it was getting a little too centralized in China. Now that we're seeing those mining rigs drop significantly, what's going to happen is those mining operations in China, it's not like they're going to just close the warehouse and let that stuff just sit. There's a lot of talk about those operations moving to America. There's a lot of talk about them moving over to other parts of the world. Heck, I could imagine Russia probably being a haven because it's so cold up in the north. They'll run mining farms as heaters for the Siberian prisoners or something. I'm making some weird tangent up. But I do think that it creates a temporary imbalance because when hashing goes from, let's say, 100 petahash down to 50 petahash, all of a sudden you have to change the computer, the program. They call it the mining difficulty. Otherwise, it's hard to solve blocks of data. So the network is always adjusting for imbalances. If more hashing power comes in, they make it harder to mine Bitcoin. If it disappears, then it decrease the difficulty. But I'm not so concerned. I don't think it's that big of a deal. It still is a very distributed ledger with regards to Bitcoin, even though you have some places shutting down in China. Absolutely. Let's see. So I think that was that one. Let me go to Alex's question on VET. What time is it? Oh, man. We're doing a Friday show for an hour. Dab nabbit. VET. Vermilion. I like it. So here's VET. Vermilion Energy. This was an... I'll remove the golden cross right here. You guys see it? A golden cross in January. I don't buy all this technical mumbo-jumbo stuff. You look at the price chart here of VET. Beautiful. Granted, it's still a very cheap stock, looking at $9.10, but in October, this thing was almost $2. Higher highs, higher lows. It looks like it's having a little hesitation right here, but all in all, I still like it. I think it looks great on the daily. Let's look at the monthly to see what the big term picture is. You may have hit that bottom and had your turnaround moment for Vermilion here. I'm not exactly sure where you got in here, Alex, but all in all, I like it. You're going to have a big issue once you get near this, let's call it $16 mark, but that's so far away. If it gets up to, it really is, look at about $14 was your next major area you got to work. Oh, damn, I like this chart. I hope you're in Vermilion Energy. I don't know if I get that one. Let's see. Let's go crypto. VET dollar, huh? Oh, you're talking VeChain? Okay, yeah, there you go. All right, a totally different one. From Binance, and we'll look at the daily here. Well, that changes everything. I'm not a fan. But you know what? The sad thing is this is what almost all cryptos look like right now. It does not look very good. This is just making lower lows, lower highs, trending. And this to me looks like it broke right around the same time as Bitcoin and the whole crypto world did. If you're coming into any areas, you've got a pretty decent demand zone down around 4 cents. Ugh. Not looking so good right now. Definitely not looking good. Who is they that control the difficulty? Believe that is automated. There is a Bitcoin organization that is kind of this decentralized group of programmers and developers. They're called Bitcoin Core. I believe that the mining difficulty is automated. I don't know how often the adjustments are. I know it was I thought it was once a week, but I could be wrong there. It's going to automatically adjust. And basically you can go and look at, I'll bring it up for you. Let's go Bitcoin hashing power, right? You can pull up the hashing site. So here's the estimated hash rate, and there's your chart. Wow. Conveniently enough, the amount of hashing power has gone from 180 million terahash. Is that right? I think that this is actually what's called petahash. And it's now currently at 107. So you've gone from 180 to 107 on it, and conveniently lines up with the price of Bitcoin. The hashing algorithm, which they call it the mining difficulty, is going to change. And here's the network difficulty. You can see it's been dropping, but not aggressively. I think it's going to have to drop much more here to accommodate that big decline. But the difficulty has been adjusted. It looks like it's weekly. So let's see. There's the 27th. Sorry, May 28th. Yeah, and it adjusted on May 10th or June 10th. So it looks like it maybe every 10, 12 days it's when it adjusts. But yeah, I believe it's fully automated. So for those who are asking the question out there, John, fully automated. Okay, did I add one last one? Oh, this is a good one. The last one, because I got to get out of here before 3 o'clock. It's killing me today. Last one from Jeff says, does all crypto use blockchain technology and need to be mined? No. There's a wide variety of different technologies out there. There is proof of stake, which is a different technology. So proof of work, which is what Bitcoin is, which is Ethereum is right now, but it's changing in the process of changing. Litecoin, Dash, a bunch of others, Dogecoin. Those are proof of work, which require miners. And it's about competition to solve blocks of data. The block times are different for all of them, right? The amount of power they use is going to be different. There's also proof of stake, which is something like Cardano or Polkadot, where you would actually stake your cryptocurrency into a pool or a wallet, and you are rewarded for contributing your cryptocurrency to it. You become a validator. So instead of having a stake or a network of people trying to solve blocks of data. You have people who are paying and being validators. And if they are selected as a validator, they get rewarded with some cryptocurrency, native cryptocurrency. So they don't all need to be mined. There's also other ones out there with like hash graphs or directed acyclic graphs, the Tangle. These are different types of technologies that are running decentralized ledgers. But there's a lot of different ways to skin that cat. Who knows what the real winner will be? All of them are going to have varying degrees of security, varying degrees of speed of transactions, varying degrees of process through power. So a lot of different considerations for each of these projects, but I'm not going to go down this show. Yes, Ethereum is. It's funny. Alan says Ethereum about to be POS too. I was like, well, a piece of shit. No, it's not. No, proof of stake. Yes, they are switching right now, and one of the concerns is energy consumption. By going to proof of stake, you significantly drop the need for mining rigs and those types. I could literally run a proof of stake network on my old Pentium 5 over here to run fine. All right, Nick Brown. Oh yeah, good. Hey Alex, good to have you with us. Glad baseball's in full season. Glad you get to go out and have some fun out there. All right, last one for Emmanuel Toussaint. One of the most amazing musicians ever was Alan Toussaint. Are you related? He was just phenomenal. USD CAD. All right. Here's USD CAD. Now, I'm going to let's start off with the dollar index first. Just start at the dollar index because we've been focusing on this one. It formed a nice double bottom this week, on the weekly, and I just wanted to bring that one up because we've been talking about this 90 mark, right? And it's really just bounced off it multiple times. Here's your daily of it. And you can see the past couple weeks, it found a foundation, rallied up, so it's making me feel better about the US dollar, more bullish. Granted, if you look at the weekly, we're still looking awfully weak. That's what they call it, the weekly chart. But I'm starting to feel a little bit more confident with the dollar as a bullish move. Now, of course, it's got to get above 93 before I really feel happy about it. And then all of a sudden, maybe we'll see this thing reverse. So, brings us to USD CAD. Similar picture here, right? You've had the dollar just getting crushed against that Canadian dollar on the weekly. You go to your daily. You had this big breakout swing, but in order for it to really prove to me this thing is moving up, it's got to get above this 126 mark. I have a trend line which was drawn from some time back on this bad boy. We can modify this if we want. Let's see if I can. I'll just put a new one on. And just notice the most recent highs here on the dollar index. If you go, let's say right through here, we're still in that downtrend. No matter where you draw it from, it's still a pretty decent downtrend going on in the Canadian dollar or USD CAD. So it still makes me feel a little bit bearish. The only thing that makes me feel positive is the most recent move. We've had this nice big surge up. That makes me feel a little bit more optimistic. But long term, I'm not going to feel like jumping on USD CAD until it gets above 126. I know it seems like a long ways away. I'd rather leave some money on the table for the security of knowing that this thing has finally turned, because this daily chart shows you that trend has been down aggressively since going back into March, and it hasn't changed yet. Okay, so there you go, Emmanuel. Hopefully you like that one. Cool, John. Thanks. Yeah, crypto is pretty fascinating. I mean, that's why Online Trading Academy, said, "Hey, Merlin, we want you to build a class because there's just so much to it, and I'm barely scratching the surface on this show. There's so much more we can go into. It's really a fascinating world that's evolving and before our eyes. Some people still think it's a scam. I'm in the camp that says no, it's just a changing of the guard. It's it's like having a horse and buggy and going, oh, that train thing, oh, that's not going to work. Well, yeah, it did. Trains changed the way we got around, and I think this will do something very similar. Alan says, the success of Cardano and other altcoins built on the Ethereum framework also mean success for Ethereum. Cardano is not. Remember, anything other than Bitcoin is an altcoin. Anything. So if it's not Bitcoin, it's an altcoin. Cardano and Polkadot, for example, are not built on Ethereum. They're their own separate chains. They're their own separate protocols, separate rules. Cardano and Polkadot are actually designed to compete with Ethereum. So while the rising tide lifts or sinks all boats here, I have been positioning myself a little bit more in the Cardano and the Polkadot space. Number one, because of the staking rewards, but number two, that the potential for these companies to compete with Ethereum, which has major issues and legacy problems right now. But that's it. Bummer, Emmanuel. I think he passed away a few years ago. It was one of my favorites. All right, guys, that's going to do it for me. I don't think we have anything. Oh, yeah, we did have something to talk about. Let me see if I can bring up this chart. This is the only piece I wanted to bring up with regards to what happened this week was this. The PCE price index, which was released today, again, is one of the ones that the Fed keeps a very close eye on with regards to inflation. Some people feel it's their number one thing to look at. The number actually came out lower than expected, which is good for the people who are really freaking out about inflation. It's basically calming what we saw in the PPI and CPI numbers. You also had some data done. I think I put a red box on this, did I? No, I didn't realign it. Never mind. We'll keep that red box out of there. I thought it was noteworthy to look at personal income and spending. I normally don't focus a lot of attention on that, but you can see how personal income was declining aggressively. That's because of stimulus, not being, there's no more stimulus out there, and also some of the employment benefits are going back to what they should be and not extra bonuses for people to sit around and not work. So personal income was way down. It's coming back up, but it's still showing contraction in personal income. And then we talk about this so much about how the U.S. economy is a spending economy. We must spend for America to thrive, and the world must spend in America for us to thrive. Well, you look at what happened here with personal spending. We had a nice increase last month of 0.9%, expected it to drop. We came out at zero change, meaning we didn't see much spending. This I find as probably the biggest surprise of the day. The reason I find that the biggest surprise, everyone's talking about traveling right now. Everybody I know is talking about going places, buying things, and spending. I mean, cars are in short supply. Amazon Prime days are, soaring. It just seems like we all spent a ton of money. So I'm curious to break that down maybe a little bit more and see what areas are really lagging in the spending department. Because if spending continues to be subpar, that's going to start to have an impact on GDP and some of the more economic measures of growth that we look at. So we'll have to keep an eye on this one going forward. 1 point data really doesn't tell a big story. We'll see how it pans out further down the road. All right, guys, that's going to do it for me. Again, if you are new to the program, I see we've got a few new names. Welcome. Thank you for joining us. Hit that subscribe button. That always helps me out. You can always hit that thumbs up button. One of the best things you can do is comment down below the video on YouTube. Whatever questions you have, I usually answer those ones first. So if you have questions, comments, feedbacks, put them under the YouTube video. If not, if something maybe a little more long-winded, you can email me at TraderMerlin@gmail.com, and I will hopefully get to all those questions as soon as I can. That said, hope you guys have a great weekend. I think next week is going to be a fantastic. I think I'm more excited about next week's trading week than I am about this one because of OPEC. I think oil is going to have some great trading opportunities, so I might be back in the CL futures market. That said, I hope you guys have a great weekend. Go do something fun. Make sure you guys stick with your June challenge list. I will see you on Monday. Take care, everybody.